On your screen, you see the next of our multi-column journals. This is the cash payments journal, which is pretty much the opposite of the cash receipts journal that you just had. We'll take a look at some of the entries here. The headings of the columns are pretty much standard. You will see that we have a general debit and a general credit column, and there are entries in the general debit column that we'll see that we hadn't had in the previous multi-column journals. Accounts payable debit column we will be using quite a bit, something called purchases discount credit that we'll talk about, and then cash credit, of course, because this is the journal that records entries that spend money from the business. So let's take a look at a couple entries. March 3rd, we're paying an expense, electricity expense. This, as you see, does not have its own special column in this journal, so we have to use the general debit. So we, as we have done in the past, we debit an expense account when we pay it, and we credit cash. The source document is a check number column, and in almost every case, the source document will be a check. So check 516 is our source document. We're not going to worry about posting just yet. March 4th, we bought some office supplies, and I want to make a special note of this entry. As you see, again, there's no special column for office supplies, and the only place we can debit in this journal would be the general debit, again, 95.50, or excuse me, 95.40, and the credit is obviously the cash because we're writing a check. So this is different than an entry in the purchases journal. The purchases journal is used for times when we buy inventory, and we'll see a little later why that needs to be separated out. But the purchases journal is used for inventory purchases. When we purchase something else, then we have to use a different journal. Office supplies is not inventory. Obviously, we don't sell office supplies. We use them, but it has to be recorded. Office supplies is something of value. It is an asset, and we record it in this journal. The next one, Timken Steel. Again, this is cash payment, so we must be paying this company. This is a creditor. Timken Steel is one of the people we owe money to. And you see we wrote a check, and you see accounts payables debited and cash is credited. Anytime we pay off a liability, that liability goes down, and that's why it's debited. And obviously cash is credited. But pay attention over here to the right. This tells you the terms that you would actually see if you went to the accounts payable ledger and looked up the account for the Timken company. Our business bought on account from this company $314.90 on February 10th, 2019. The terms were 210 and 30. We've had that before, so you should be familiar with what that means. If we had paid within 10 days, we would have taken a 2% discount. The total amount, the net amount, is due in 30 days. But we are paying this on March the 9th. We purchased or made the purchase on account on February 10th. So we are well past the 10 days. So we did not get any kind of a discount. So nothing is put into this column. Let's take a look at the next one. Again, mortgage payable. This would be a regular monthly transaction. We are paying our mortgage. This is not an accounts payable. This is a long-term liability. Accounts payable, remember, are typically those bills that are due on a short-term basis, typically 30 days. Mortgage payable, the entire mortgage is due probably in 15 to 30 years, but we make a monthly payment. So that is a separate account, and it has to be debited, in this case by $1,800, because it is going down. We are paying part of the liability, and that means that liability has to be debited and cash is credited. Normally, there would not be a purchase discount on a mortgage, nor would there be one up here on the expense that we paid. So that is not going to be used in this kind of a transaction. The next one, however, March 21, we paid the Quality Manufacturing Company. We wrote a check for check number 520, and you see the accounts payable is debited by $1,500, and there's $30 now in this column, the purchases discount credit column. Let's take a look at the terms. Over here, again, if you go to their account, the quality company's account in the accounts payable ledger, you'll find noted in their account that they offer us some discounts. So again, we purchased this, we bought this on account on March 17th. Terms are 2, 10, and 30. Again, 2% if we pay it within 10 days, 2% off. So if it was purchased on March 17th and we're paying it on March 21, we're within that 10 days, so we can take a discount. So if you subtract 2% out of $1,500, you get $30. And that's where we record that discount in this column, purchases discount credit. And purchases discount is a contra account, and that is credited. So the amount that we pay is $1,470. We don't pay the $1,500, we got a discount. But as always, in any entry, the debits have to equal the credits. Those two credits that equal the one debit. Telephone expense is done the same way as electricity expense above. Again, that kind of a transaction would not have any element of a discount. So you simply debit telephone expense and credit cash. And the final one, March 29, Hanson Company, we paid their bill, and the terms over here were pretty generous. If you look at these terms, we bought this on account on March 16th, and the terms were 5, 15, and 60. Obviously, that means we get 5% off if we pay within 15 days. And if not, the whole thing is due in 60 days. That's what the N60 means. So we purchased this on March 16th, and we're paying it on March 29. If you do a little simple math, you see that we are within the 15 days. We get the discount. But the discount, remember, is 5%, not 2%. So we take the amount that we owe, we debit that because we want that account to end up with zero, because we are paying off that entire $750, but we're paying it with less money, $712.50. If you take 5% of $750 and deduct it, you'll see the discount is $37.50. So we're paying the difference, $712.50. So that column, purchases discount credit, is the only real new trick to this particular journal. Let's take just a bit of a look at posting. And again, the advantage of these kinds of journals is that we save a lot of time in the general ledger when we do the posting. There could be many, many cash credits in this particular company. I've got just a few here, but we don't post to the cash account individually these amounts. We simply post the total. The 4680.39. This could be done daily, could be done monthly, could be done weekly. It varies on how much business that the company does. That will determine how often they do the posting. But if we do post it, probably the account would be 101, and we put that number here, and that total goes to the cash account on the credit side. Purchases discount would get put into that account on the credit side. The total, again, not the individual amounts. And again, accounts payable, the total $2564.90 would be put into the accounts payable debit column. Now, one note, you see no totals over here for the general debit. That's because these are all different accounts. These are the ones that we would put in individually. And we would use this posting reference column for those accounts. So this is electricity expense. So if that happens to be account number 601, we would put $229.89 in the debit side of electricity expense. If telephone expense is 602, we would put $57.70 on the debit side of telephone expense. These are companies, and these all would be put into the accounts payable ledger. So they would have their own individual account numbers, and they would be placed in here, and each one would be debited because accounts payable is debited, and whatever you do to the accounts payable account, you also do to the creditor's account. So you would debit, in this case, Timken for $314.90. So we'll be doing some practicing with that. So this is the cash payments journal. At this point, I would ask you to go back to your course page.